So I'm not breaking the news if I tell you that VAT should be neutral for all businesses. Neutrality is a key principle of the VAT system, and in part it means that VAT should not be a cost for companies. In practice, this translates into the ability of businesses to either deduct VAT or to ask for a VAT reimbursement. But recovering EU VAT can be particularly challenging for those businesses that are trading internationally and that are not established in the countries where they have paid that VAT. So what are the scenarios that can lead your company to be in a credit position or refund position? So it can happen that you are VAT registered in a country because you make some business activity in there, but for a specific period, your output VAT, that is the VAT that you collected from sales, is less than your input VAT or the VAT that you have paid for your purchases. So you are in a credit position. Also, being in a credit position can be something usual depending on your business activity and transaction flows. So, for example, you may be doing some local purchases where you're paying local VAT, but then your output sales, your sales transactions are zero rated. So, for example, you made exports, intra-community supplies, or local sales, but under reverse charge, so you don't collect VAT. Again, you would be in a refund position. And finally, it could also be the case that you don't have any business activity in a specific country, but because, for example, you attended a conference or some things like this, you incurred and you paid local VAT from that country. So in the example of going to an event, you paid local VAT for the access to the event or the conference, or the accommodation, transport, etc. So the key question is how to recover EU VAT. So during this webinar, we will focus on these three mechanisms. First, through your VAT returns. That means that you are VAT registered and submitting VAT returns in a country. And also we will see the other two mechanisms for non-established businesses. The VAT refund for EU businesses, also formerly known as the 8th Directive mechanism, and the VAT refund mechanism for non-EU businesses, also known as the 13th Directive mechanism. An important note to make is that the applicable refund procedure is not really optional. So you really need to assess your situation and choose the right path to ask for your VAT reimbursement. Because otherwise, if you go through the wrong procedure, the VAT refund claim will likely be rejected and you may have no time to go through the correct procedure. So it's very, very important to choose right. So let's start with the first one, VAT recovery through your VAT refund through the VAT return. So this happens when you are VAT registered in a country where you are performing certain taxable transactions in that country, and therefore for your VAT recovery you would go through the VAT return. What are taxable transactions? What do we refer by that? Well, these are usually transactions such as domestic sales where you need to charge local VAT, or export transactions, intra-community supplies, intra-community acquisitions, or even movements of your own stock. These type of transactions usually call for a VAT registration in a country. So when you are making those transactions, your VAT recovery will go through the VAT return that you should already be submitting in that specific country. What should be considered about recovering VAT through VAT returns? Well, the first thing I would like to mention is that there are certain countries that are particularly strict on the fact that you must have certain taxable transactions during the same period where you incurred in VAT and you want that reimbursement. I'm thinking specifically on Spain. So you may have a Spanish VAT number, but if you have not performed taxable transactions, the VAT return may not be the right way to ask for your VAT refund. So that's one thing to consider. And another thing I wanted to mention is that the procedure and specific rules are really depending country by country. So just to give you some examples, since I mentioned Spain, in Spain, when you want to claim for a VAT refund, you need to wait until the VAT return for the fourth quarter of the year. That's as a general rule. So imagine you have some VAT credit, or you're in a refund position in the Q1. You need to wait and carry forward that credit until the end of the year, until the Q4. So that's for Spain. We have, for example, Italy, where the most of the companies will ask for the VAT refund through the annual VAT return. So again, they will wait until the following year when submitting the annual VAT return to ask for the VAT refund. Other countries like France, it's more usual, and there is no burden on asking for a VAT refund on a monthly basis. For example, it has the reporting frequency of your VAT returns. However, you will need to reach a certain threshold, and you will also need to complete a separate form to ask for the refund. And also, there are other countries like the UK or Germany where the VAT refund is automatically processed whenever you are in a refund position in your VAT return. So those are just examples of how different rules and procedures apply in each country when you want to recover VAT through your VAT returns. Of course, once you have applied through the right procedure for this VAT refund, you should expect that the tax authorities will ask questions, verify copies of invoices, your activity, etc., before approving the VAT reimbursement. Let's move now to the next procedure, the VAT refund mechanism for EU businesses, also in the past known as the 8th Directive mechanism. So this would apply to those companies who are not VAT registered in the member state of refund. They are not making any business transactions, no taxable transactions in that country, and they are companies established in the EU. So that would be the procedure to go for a VAT refund. In this case, what you should know? Well, the refund application must be submitted in your country of establishment. We are talking about member states. So once you submitted your application, your member state of establishment will forward your application to the member state of refund. And after that, then you will be in contact with the member state of refund, who will probably ask you for maybe more information, clarifications, additional documents, etc., etc. Deadline to submit this refund application is harmonized throughout all member states, and it's the 13th of September of the following year. So heads up, if you have some 2024 VAT to claim, the deadline to apply through this mechanism is by the end of September this year. There are certain minimal amounts to consider. So whenever your refund claim refers to a period that is less than a year, the minimum amount for refund will be 400 euros of VAT. And when your refund application refers to either the full year or the remainder of the year, the minimum amount will be 50 euros. And again, what's also important to note is that even though your initial application is submitted through your country of establishment, the VAT deduction rules and so on will apply from the member state of refund. Okay, so now let's move to the third procedure for VAT refund, that is the VAT refund mechanism for non-EU businesses, also known as the 13th Directive mechanism. So again, in this case, if you're a company that you are not VAT registered in the member state of refund, you don't perform any taxable transactions in that country, and you are a non-EU company, that's the procedure to go for a VAT refund in a member state, the 13th Directive. In this case, the process and deadlines may vary across member states, so you should check your member state of refund, and the application is always submitted directly through the electronic portal of that member state of refund. Also, you should know that certain countries will ask you to appoint a fiscal representative from that country, so to have a contact with the tax authorities and you and your application. And a very, very important thing to note is that for the 13th directive mechanism, certain countries also request reciprocity with your country of establishment. So that is, if the country where you are established and the member state of Refund don't have a treaty for reciprocity, you may not be able to ask to recover your VAT from that member state. Just to give you some examples of countries that ask for reciprocity, we have Germany, Italy, Poland, Portugal, Romania, Spain, and the list continues. So it's an important check to do. And in this case, the deadlines for submitting this refund claim are usually either by the 30th of June or the 30th of September of the following year, depending on the country. So again, heads up, if you have some 2024 VAT to recover through this 13th directive mechanism, just so you know that certain countries, the deadline for claiming it ends by the 30th of June. Some of these countries are Austria, Finland, France, Germany. So it's another important check to do so you don't miss this deadline. Okay, so just to do a small recap on the different mechanisms, I prepared some use cases to go through it. So what's the right refund procedure here? Imagine that you are an Austrian established company and you have attended a conference in Spain. So you receive an invoice with Spanish local VAT, 21%. And of course, you know VAT should be neutral. You should be able to recover that Spanish VAT, but you want to know what is the right procedure. You don't have any business activity in Spain. You just send some employees to a conference there. So again, taking all these things into consideration, considering that we are a new company because it's based on Austria. This company does not have a VAT registration in Spain. The right procedure to refund, to go for a refund, is the VAT refund mechanism for EU businesses or the 8th directive mechanism, as in the past this was known. Second use case. So imagine the same company, Austrian established company, attending the same conference in Spain. But in this case, this Austrian company has certain business activity in Spain and therefore has already a Spanish VAT number. What's the correct way to recover this 2,100 euro of VAT from the conference invoice receipt? Well, in this case, it should be through the VAT return, the Spanish VAT return. So this invoice will be included just as a deductible amount. And if you don't have, if you have some output VAT, some sales to compensate it, it will be fine. And if you're in a credit position, as we said earlier, this company should wait until the Q4 to claim for the VAT refund from the Spanish tax authorities. So in this case, the VAT return. And let's go for the final use case scenario. Imagine in this case, it is a UK company, so a non-EU company, attending the same conference in Spain, receiving the same invoice with Spanish VAT, and wants to recover it. So I guess that by now you are already experts on the refund procedures in the EU. Since this is a non-EU company, and is not VAT registered in Spain, has no business activity in Spain, the right refund procedure would be the VAT refund mechanism for non-EU businesses. In this case, we need to check the specific rules from Spain, see if the country asks for reciprocity, which in this case it does, see if then there's reciprocity agreement with the UK, which is the case. So the UK company can claim this VAT through this specific procedure. Okay, so that was it for the different refund procedures that there are in the EU. Now that we have it clear, let's review the general conditions and requirements so our application is accepted. So some things to consider, some questions that we should ask ourselves. First, and the most obvious question is this VAT deductible? So basic requirements is that I'm a taxable person, a business, and that the expense is business related. So there should be a direct and immediate link between the expense and the taxable transaction that I am making. Also connected with this point, another good question is, are there any deduction limits in this country, the member state of refund, for the specific VAT that I want to claim? So there are certain expenses that are not 100% deductible, so they may be partially deductible or even not non-deductible at all, and this varies country by country. Some examples are, for example, are travel expenses, so hotel accommodation, transportation, meals, also access to training, access to events, the purchase of fuel, the purchase or hire or repair of vehicles, entertainment expenses, business gifts. So these are kind of on a gray area, whether business related or not, and member states usually have certain rules concerning what you can deduct or not deduct in this area. So that's another good thing to consider. As a third question, I would say it's to analyze if the VAT was correctly charged by my supplier. Why? Because the first thing the tax authorities will do when receiving your refund application is to review the full transaction and see if everything was correctly done. So imagine your supplier has wrongly charged you with local VAT. In that case, the refund will be rejected, and then you need to contact your supplier so he or she cancels the invoice and the VAT and so on. So that's an important check to do as well. Another good question is, are the invoices correctly issued and following the invoicing rules from the member state of refund? So that's another typical check from the tax authorities. Review the formal aspects of your invoices. In principle, this should not be something that prevents you from obtaining a VAT refund because it's a formal requirement, but it can delay a bit the process and had some and make you having some issues in when recovering VAT. Another good checks or things you should be prepared for are getting your supporting documents ready. So you should expect that, of course, tax authorities will not just send you the money back upon an application. So usually you will be requested to provide copies of invoices or at least a sample of them. Also the custom documents if you want to recover import VAT, and also other types of information and documents such as the VAT books, even an explanation of your activity, even list of your clients, etc., etc. So they will want to review the full situation and understand that everything is correct and that you are really entitled to that refund. Also consider time limits. So if you are submitting the VAT refund claim for non-EU businesses or for EU businesses, you have very strict deadlines. Only certain countries are more flexible on those deadlines of the 30th of June or 30th of September of the following year. So in principle, you really need to stick to those deadlines if you don't want to lose your VAT recovery. And when it comes to the VAT returns, again, you have also certain rules you need to stick to, and particularly we are thinking on the statute of limitation, which is in general the time frame that you have to claim the VAT and deduct VAT from invoices received. And in general, of course, follow the right procedure from the beginning, and again, follow country rules. So again, to mention that certain countries have minimum refund amounts, reporting period rules. It could be also a matter of reciprocity if you are going through the 13th directive mechanism. So all these things are good to have in mind when going for a new VAT refund claim. So just as a summary of what we've seen, first of all, Very important to choose correctly the type of refund procedure that you will follow. Either the VAT refund mechanism for non-established businesses, the one for the EU businesses, or the one for non-EU businesses, in case you don't have any taxable activities or VAT registration in the member state of refund. And if you have a VAT registration or you're performing taxable transactions in the member state of refund, so you should get the VAT registration, the VAT return will be the right way to ask for the refund. Once they receive your application, the tax authorities will review it. So you should expect that they review your business model, they review certain documents such as copies of invoices, explanation of the activity, etc., and check all other formal requirements as well. Some common errors you should consider is that VAT was incorrectly charged by the supplier. Just to give you a typical example we see sometimes is that local suppliers charge local VAT for supplies of services to companies that are non-established instead of sending the invoice to the VAT number of the country of establishment as an export transaction of services or intra-community supply of services without VAT. So charging incorrectly VAT will automatically mean a rejection of your refund. Obviously, you should also check that all the documents that you provide are correct and complete, and also reply in time to the tax authorities' requirements. And another common error is not following the correct procedure. And the consequences. Well, the refund can be denied if some formal or content rules are not met. In some cases where amendments are required, you may have to restart your application, or even there will be a delay on the procedure. And obviously the worst case scenario, the worst consequence would be losing your VAT because you may have missed a deadline or you went through the wrong procedure, and then when you want to go through the right one, it's too late. So very important again to do things right from the start, from the beginning.